Okay, so I'm making this video now because there's quite a lot of stuff that's going on that perhaps you're not aware of. And I see on Twitter there's a hell of a lot of people they're caught selling the Nasdaq, the S&P, DAX, and they've lost quite a bit of money, but they're holding on. So what I wanted to do is make a video to make you aware that there's a motivation behind the market moves, and I've even done a case example where if you were to apply logic and reasoning, it can result in failure. So I'll talk about that now. I've got the two case scenarios, the inexperienced trader and then the experienced trader. And even the experienced trader will be doomed to fail because he doesn't understand the motivation. And that's what we're going to talk about today. So this is the mantra from Warren Buffett. There's a lot of truth in this statement. Be fearful when others are greedy, and greedy when others are fearful. So if you look historically at all the crashes that have happened, there's always been an abundance of greed. The dumb money have gone long, and look at your dot-com crisis in the 2008. There's lots of dumb money coming in, and it's causing imbalance. So essentially, they don't want you to be greedy; they want you to be fearful. Okay, so keep an eye on that quote there. It's very important, and live by that. So this is very quick, easy explanation of what happens when you first start trading. You'll succumb to emotions very easily. So all these things that are going on, in real time, when you see a news event, anxiety, depression, panic, worry, you've got fear, all that negative stuff when you see the news. So this will happen to you when you first start. Now, when you become experienced and you've been trading for several years, you'll realize that this actually does you no good at all. It's actually detrimental to your account. So what we want to do, we want to distance ourselves from the emotions, and then we want to apply logic, which is a higher form of thought. But what the experienced trader doesn't realize is that this logic is actually destined for failure. Now I'll explain to you why. So let's say we've got the inexperienced guy is doomed to fail, and then we've got the experienced trader, and even using logic, he'll lose money. Now I'll explain why. Let's apply logic to the state of the market and why it should fall. Try it yourself, make a list. So look at all the negative stuff you see on Twitter. Yield curve inversion, the death cross in the S&P. Okay, so that happened last year, but that caused a lot of fear. You've got the coronavirus, you've got the central bank rhetoric. There was the impeachment, that has caused a bit of volatility and uncertainty. Pandemic outbreak, bird flu. So, just add them up, and each one just simply confirms that bias, the logic that market should fall. Makes sense, doesn't it? Okay, experienced trader uses logic and reasoning, and without any emotion comes to decision. This has to be the top. That news is getting crazy. So he's got a bias now because he's looked at the logic why it should fall. So fair play, sell. And S&P fell 30 points. It's time to sell. So that's just another confirmation bias, just on top of that list that it's actually had a little retracement. Let's go in and sell. Okay, but S&P rallies to all-time highs. Why? What experienced trader didn't know was his logic, that logic which I just talked about, didn't fit the narrative. His logic was perfectly sound. He was thinking what they wanted him to think, fearing what they wanted him to fear. Now that's absolutely key. So what the heck is this narrative? Why would even applying sound logic to an argument and distance himself completely from emotions cause me to lose capital? Why do I keep losing money even after all this time? So here's the narrative. This is a feasible explanation of what's going on. They want you in a perpetual state of fear. If you are fearful, you want stocks to decline. Where will those stops be? Above or below price? Your stops, well, not when I say your, I mean traders worldwide on a global scale had their stops above. If you're fearful, your stops are above. So the banks want your stops. Where's price going to go? It's going to get your stops. And anyway, perhaps price is going to come up regardless. But you're fearful, so your stop's up here. And there could be 500 million USD, I don't know, a lot of money in stops. So it's a huge amount of liquidity. So they want you in a perpetual state of fear, and they do that by news and Twitter and social media. They do not want you in a perpetual state of greed. And so obviously the reverse applies, and they don't want you to go long because your stops are down there. And like, oh, but we want your stops, that's easy money. So they're a bit annoyed, So it's just the reverse. So they want you to be fearful because it's a double win for them. The price is going to come up, their portfolios will increase, and they'll take your stops in the process. So it's a win-win scenario for them. You can't blame them. But surely it's not that simple. Well, think about how much liquidity can be found in stops. Have you blown an account already? Now, I dare say that you probably have. I have blown an account, and I've spoken to 20 people already in my Twitter history that have. And how much was that? Was it $1,000, 5,000, 10,000, 100,000? I've seen people, they've lost more, on options and stuff like that. So, you multiply that value, this 100,000. Okay, so perhaps that's a bad example. Let's say 10,000, because that's probably a better figure, more normal. And then you multiply that by the amount of traders worldwide. So, it's a lot of zeros. There's many, many zeros. And then realize it's exceptionally common for traders to blow their accounts for their first and even the second time. So after the first time, you'd use that as a lessons learned, and you wouldn't do it for the second time. But after the second, and you persevere, then good luck to you. Conclusion. So how do people blow their accounts? Well, they don't use sensible risk management. They have their stops up above, but they'll think, oh well, it'll come down. I mean, this coronavirus is so scary. This price is gonna come down, right? I'll just move my stop a little bit higher, and then the next day comes along and price comes up. And I say, oh God, I'll move my stops a little bit more. And then it can't go up any higher than it is now. And on Wednesday, oh, well, I guess I'll just call it a day. And then they get stopped out, and see how it happens. They could keep moving their stops, but regardless, it's going to take their stops anyway. But they'll move stops. That's the thing. So that's the bad risk management, is that they want to move their stops, and that causes the issue. It sort of becomes exponentially worse over time. So they're not aware of the narrative. Now, the narrative is essentially they want you to be in fear. Okay, they want you in a perpetual state of fear, and that's mass media propaganda. Okay, so the coronavirus is legit. It's a risk event, but that's what they want you to do. They want you to be fearful. And that's purely designed to scare people out of their long trades. All right. The banks reap their stop losses caused by this fear. So the mass media are in cahoots with the banks, and they act as like a source for this fear. So if you read the news, and then you're basically just supplementing what they want you to believe. It's so effective it even defies logic and confounds even the experienced trader of 10 years. So even if you were to distance yourself by emotions and you apply logic, you'll still lose money, because they will just want your stops and price is going to come up. Now, it's pending that everyone's remaining fearful, price will come up. If they turn greedy, price will come down. And this is what we're doing on our spreadsheet. We've got the risk on, risk off metric. So we're currently risk on because there's a lot of fear. And that's what they want you to think. Okay. So think about that for a second. Now, this logic argument. You could be trading for a long, long time and not realize you had wool over your eyes all that time. You've essentially been told what to believe all this time. And even when you apply logic, you're already doomed, since it doesn't fit the narrative. that they want you to be in a perpetual state of fear. Now, if you're in a perpetual state of fear, then you know where your stops are going to be, price is going to come up. So it's a win-win for the banks. So it's just a 10-minute video. Hopefully it explains what happens and um, even why the experienced trader is doomed if he uses logic. And you can look on Twitter, and there's people been going on Twitter for a long, long time, and they're stating these things and they're fear mongering. It's actually adding fear to the collective mindset, and we want to distance ourselves from that, and we want to know the narrative as well and why things do that they do, and it's for this because it's liquidity, probe and absorption. So yeah, 10-minute video. So hopefully it helps. I did think about this late last night, and I wanted to make it because I've seen a lot of people that got caught now. So perhaps they're going to be right, perhaps they're going to be wrong. Look at historically at the S&P. Look at last year. We're in the longest bull run in history, so you wouldn't really want to fight that. So I hope you have a good day, and yeah, let me know what you think of the video. Hopefully it helps, and I'll speak to you later. Yeah, see you soon.